All right, guys, I'm getting a really good little list here of questions from you, which is incredible. But rather than making up the answers myself or telling you what I think, I've consulted an expert. Justin's here with me today. To start with, hey guys, I'm Rebecca Green, a real estate divorce professional, and we're going to chat all about buying and selling houses while you're going through the big D word. I know it's stressful. I know there's a lot of moving pieces with it, but when you have the education, you can make some really wise decisions. So, Justin, before we jump in and I ask you all of these many questions, do you mind to introduce yourself?
Yeah, totally. And Rebecca, I just have to say how much I love this channel that you have going. It's just so resourceful, and I hope those that are in need of the information are just using it to the maximum capability because it's just so resourceful. My name is Justin Rabin. I'm the owner and senior mortgage officer at Crown Mortgage, located in Kansas City, and I've been in the business for about 22 years. So I think the thing that I find in the mortgage business is that we're heading in this direction of where there's so much AI or there's just so much non-human interaction that's happening. And it drives me crazy when I hear somebody say, hey, just go to my online information or application. And I don't, necessarily want to spend time getting to know you. And I think that's the thing that sets us apart is that interaction that if somebody wants to sit down right here, great, let's do it. But just getting to know someone's goals and doing some discovery around what's important to them is, in my opinion, what sets us apart.
And it's so important, especially when people are, I mean, I see it a few times when you're starting your life over, when you're getting a first time loan, really understanding the process of what's going on behind the scenes with your personal finances is so important.
Sure.
So I said this before, I don't just work with every vendor off the street. I'm really strategic about the people that I refer and choose to send to my clients. And Justin is one of the best. So
Thank you.
yeah. All right. I'm going to just actually read you some of the questions that I've had people write in, some specific scenarios, and let you just run with it, if that's okay.
Great.
All right. So, scenario number one, like I said, guys, these are questions that people have sent in, scenarios that I've come across. And I always feel like we learn the best from real life situations. So, here we go. Scenario. Hey, Justin, my husband and I are in the middle of a divorce after 12 years of marriage. I've been a stay at home mom for the last 9 years, raising our two kids. They're now 7 and 10. He's been the primary breadwinner, making around $120,000 a year. And we own our home with about $75,000 in equity. He's offered to let me keep the house so the kids don't have to move. But I don't have a steady income right now other than the child support and potentially some maintenance.
Yeah. So, the question of, hey, can I stay in this home? A lot of that does boil down to the income question, which I think is what this question is getting after is, can I potentially maybe use the income that I receive as a result of the divorce, which could be some child support, could be, alimony, what have you. So the main rule behind that is that we have to show that that income is going to continue
Okay.
for at least 3 years. Okay. So that could be a court order, that could be a child support disclosure/agreement, but it has to continue for at least 3 years. And you have to have received it for at least 6 months
Okay.
before we can use it. Okay. And not just 6 months, but ideally it's steady. So it's consistent. So we're not saying, for example, $1,000 in, let's say, child support here, $500 here next month. So we
Mhm.
want to see that consistent. Okay. Now, one kind of workaround, it could be very temporary type of workaround, is if this person, this question, say has a family member that would be willing to help them out to say co-sign, even though they already live in the home, but maybe co-sign on the new mortgage with them, just from an income perspective, that could totally work. And then when they do have, say, maybe some more steady income, or maybe the income that they're receiving as the result of the divorce is a little bit more steady, then we could look at removing that co-sign from a mortgage.
That makes total sense. So, one of the things that people experience in divorce is figuring out how to get that child support number. When the child support number isn't in question, you're good. But I have clients who just take a Venmo once a month. I have clients who have a direct deposit or get a check. From a lender perspective, does it matter where it comes from?
No, it doesn't matter. Again, the consistency is the most important thing. So, we're gonna want to see the court order first, and then generally we're gonna want to see some bank statements with those deposits coming in with some consistency. It doesn't necessarily matter where the source is coming from, Venmo, et cetera, et cetera. Just that if the court orders say $1,000 in child support income, then we're going to look for that,
Right. And you said 6 months, extending for at least 3 years.
Yes, got to show at least 3-year continuance and then show receipt of that income for at least the first 6 months.
Okay. Well, I mean, that puts people in a really complicated situation. I mean, this lady specifically, because usually as you're trying to figure out move out and things, you don't have that 6 months,
Right.
and you certainly don't have 6 months of, receipts.
Right.
So that's really good to know.
Yeah, yeah, and he or she uses the word steady income, so there could be some areas that we could look into there for just income that he or she's receiving from other sources,
Mhm.
as well. For example, employment, things like that. So,
Mhm. Okay, cool. That's really helpful. And not to get complicated, but with this specific scenario where they said that they own like $75,000 on their house, assuming that she didn't have to find out some type of a payout with the equity and the $120,000 she referenced, she'd only try and qualify for a loan on that 75K, right?
yes,
So,
yeah, exactly. And there's also scenarios where there could be some flexibility from the courts as well, as far as when this person would have to take over the home,
good point.
100%. And so that could be somewhat of a longer time frame. And if that's the case, that may have the time frame to show that income coming in a little bit more consistently,
Mhm.
or if there is some unsteady income with employment right now, allowing some time to have that become steady, essentially.
That's really helpful. I see it in a lot of divorce decrees, and it's like person A has 6 to 9 months to refinance or sell the home. And so that's probably why that is.
Exactly.
I
Yep.
love it when things make sense.
Yeah, right.
Oh my God. All right. I'll read you the next question that had come in. New scenario. Hey, Justin, my wife and I separated about 2 years ago, but never actually filed for divorce because of money and the kids. I've been renting an apartment, but I'm ready to buy a small house in Blue Springs for me and my 14-year-old son. My name is still on our old marital home's mortgage, and my wife has continued making those payments. I make around $85,000 a year, and my credit is solid, but my debt to income ratio looks high because of that other loan. So it sounds like his biggest question is, can he still buy a house while he's technically married?
Yeah, this is a great question, and also some gray area that not a lot of people are aware of when it comes to this. And so the question to that, or the answer to that, is that yes, you can still buy a home whether you're still married or or the divorce is finalized.
Mhm.
However, one thing to just be aware of is that if you do purchase a home while still married, depending on the state that you live in, your spouse could have some paperwork that they'll still need to sign at closing. So just something to be aware of it, when it comes to that. But that's a good question to reach out to your mortgage lender, your real estate agent, maybe your attorney, to just plan that out to make sure everybody's aware of the expectations when the time comes. Right.
And I have actually a video on the YouTube channel that I'll link to talking with a title professional literally about that scenario.
Yes.
So
Yeah.
you've just got to have people in your corner that can help you make good decisions. There are horror stories all the time. I bought a house while I was still married, and now I have to sell. Now my ex-husband's remarried. And there have been multiple times in Kansas City where ex-husband, ex-wife, and 3 or 4 new partners that have ended up married and whatever end up at closing for one person's house. And boy, is that a disaster.
Yes. Yes. Yes.
So
Yes. But in this person's case, I think he would be in really good shape. The reason being is because he's mentioning that his wife has been making the payments on the mortgage that he's now vacated,
mhm,
right? But she's making the payments on her own.
mhm.
So the rule behind that is, as long as we can document that she's been making 12 months worth of payments on that mortgage, then we can exclude that debt
Oh, wow.
from his debt ratios
Okay.
and his qualifications, right? So that works out great in these types of scenarios where we can, yeah, and then we can just offset that, and it ends up working out great.
Now, is that something every lender can do, or because you've got some flexibility with Crown Mortgage?
Yeah, I wouldn't say everybody can. I'd say a majority could. I would say that. But there could be some what we refer to as overlays or rules that might be specific to a mortgage lender where they may not allow that. So
Okay.
if you're curious about that, it'd be a good question just address up front to understand, to make sure that that is an option. Yeah.
Mhm. I've seen this is a little bit off a rabbit trail, but it was another scenario that I had similar. Husband had moved out years ago, wife was still in the home, but this mortgage was totally in the husband's name.
Yeah.
And so they got creative and made a lease agreement
Mhm.
where the wife agreed to pay the husband and he kind of kept it as an investment property.
Sure.
Is that something that you can do?
Totally. Yeah, totally. So if we have a lease agreement, in those types of scenarios, that is totally doable. Oftentimes we'll have to get like an appraiser's opinion on what the on the property could rent as well. In addition to the lease agreement. That, yeah, absolutely. It's a super creative way
Okay.
to also, address that as well. A documentation perspective, going back to let's just offset this debt completely because they've been making the payments for 12 months. From a documentation perspective, the X or whomever is making that payment, they would have to put together 12 months of bank statements
Okay.
to show proof that they've been making those payments. So there has to be a little cooperation, right, with that. They have to feel comfortable with giving that type of information to me, right, just so I can make sure that they are making those payments. So from a documents perspective, there's a little bit of nuance there, but that's just something that if you're in this position, that expectations, just making sure everybody's comfortable with that type of game plan. Yeah.
Because I've been in the nitty-gritty of several of these situations. So let's say I'm the wife in the scenario, I'm making the house payment. I show you my bank that it's coming from. Is it important at all whose name is on that bank account?
Great question. Great question. So the person that we're trying to offset that debt for, they cannot be on that account.
That's what I wondered.
Great question.
Okay.
Yes, so it'd have to be in this scenario. It seems like this is coming from male.
Mm.
His wife or ex-wife would have to be the only one in that bank account.
Perfect.
Yeah.
I mean, that makes a lot of sense. I didn't realize. So it's got to be a full 12 months of someone else making a mortgage payment.
Correct. Yep.
Huh. Well, that's pretty easy.
Yeah.
I'm thinking that's an error.
Sure. Yeah. Absolutely.
And then it doesn't count at all towards his debt too.
That's not Doesn't count.
What do you know?
Yeah. Yep.
There's good news.
Yeah. One more quick thought on that
Great.
is that if this scenario did work out, I think he's thinking prior to his divorce, but if after, even if that mortgage is still there, because it hasn't been refinanced yet or it hasn't been taken off that mortgage yet, if we have a divorce, an official divorce decree signed by the judge and everything that breaks out how the real estate is going to be handled, for example, now belongs to the ex-spouse, then we can use that to also eliminate that payment from, in this case, his credit profile.
Really good point. Yeah, there's a lot of times where you may not be totally divorced, but even a signed divorce decree saying this is how we're organizing things. I've seen that done several times, right?
Yep.
Cool. All right, let's go to another scenario. This is number 3. Hey, Justin, my husband and I are selling our marital home and we plan to split the equity 50-50. We'll each walk away with about $100,000 cash. The divorce is civil. We're both ready to buy new homes for ourselves and the kids. The catch is our house hasn't closed yet, and I'm worried about how timing would affect my ability to buy. So this is a really good question, especially because I just want to validate whoever wrote in on this one. I tell people a lot that when you're getting divorced, you get what's called divorce brain, and it's actually worse than pregnancy brain because there's so many moving pieces. You're like, what am I going to do with $100,000? Where you and I got cash. We're like, I know what I'm doing with that. But you get scared and you don't know what bank account am I going to put it in? Where's it going to go? It's a weird feeling. So for this lady, I think one of the biggest questions that she has is how soon after selling that marital home can she turn around and use that money?
Yeah, great question. And the good news is that there is no waiting period. As soon as you receive that money, and we can show where it came from, for example, the divorce proceedings, then there's no waiting period.
Okay.
Yeah, the money doesn't have to sit in your bank account for X amount of time. In the event this is almost kind of worded as though, can I do this maybe before the settlement is done and I have this official money? And the answer to that is yes. Now, backing up to my earlier comment about be prepared, there could be some signing expectations for who the other part is, just in case. But there could be a route that you could go if there's some minimal down payment that you have already available. So let's forget about the $100,000 that you're receiving from the divorce for a second. Minimum down payment, maybe that's a 1%, 3%, whatever type of range for down payment. You use that to put towards the new home. You close on it. Okay. So you've now purchased your home before your divorce is finalized. Then when you receive that settlement of $100,000, what many will do is take that and put it towards their new home.
Okay.
In a quick term, which is called a recast. And what recasting then does is takes the mortgage payment and lowers it to meet where the new mortgage balance is at after that $100,000 is applied to it. Yeah. So it's a great strategy if there is a scenario where you have to purchase your home before the divorce is finalized, but you want your monthly payment when it's all said and done, essentially, you want your monthly payment to be at a certain number at that higher down payment. There's ways to do that.
And that's called a recast. How's that different from a refinance?
Oh, good question. Yeah. So, not a refinance. The recast is only going. For example, the mortgage rate will stay the same
Okay.
when you closed on the home. So the recast will just impact the monthly payment to match where that new lower loan balance is at.
Interesting.
Okay. Refinancing is the main objective of a refinance is either A, maybe you're thinking about taking some cash out to
Mhm.
consolidate some debt, maybe do some home renovations, or to lower your mortgage rate. That would be the
Mhm.
purpose of a refinance at that point. So,
Okay.
so yeah, two separate things. Recasting. There's also some closing costs associated with the refinance. Recasting, it's $250. So it's super, yeah, super, yeah. So yeah, but a great option for those types of scenarios.
Now, here's another random question that I sure. Let's say I've got a house that I own and I want to recast the mortgage because when my ex and I sold, I got $100,000 from a rental property.
Yes.
Is there any certain timeline? Do I have to recast within like a month of closing? Or if it's been 5 years, could I recast?
You can recast at any point in time.
Oh,
There are, so kind of getting back to just check with your mortgage lender first, to make sure, because this does differ a little bit between companies. So this will be something that'll be a little bit more specific to who you're making your payments to. Okay. So check on that first. But generally speaking, you can do it at any point in time. You're kind of allowed one
okay.
usually during that life of that mortgage that you have. So you want to make it count, to the most of your benefit. Yeah, usually you can do it at any point in time, and in very low cost, and it's a super convenient way to.
So cool.
Yeah.
Really smart. I love that. All right, let's go on to the question. How are you
All
holding
right,
up?
I'm doing great. Let's keep it
Now,
going. Keep it
for
coming.
you so far. All right, hey Justin, my ex and I finalized our divorce last year. Hey,
All right,
all right.
go.
During the process, he switched jobs and reduced his income on paper, which lowered my child support. I'm back in the workforce now, making around $55,000 as a nurse, but I have a limited savings and my credit took a hit during all of this. I'd love to buy something around $300,000 in the Kansas City area so my kids and I can have some stability. Her biggest question is, what's the best strategy for rebuilding credit and qualifying for a home post-divorce?
Yeah. Yeah, good questions. With credit, it is 100% specific to someone's scenario. Okay, so
Okay.
if this is on your mind, I would highly encourage reaching out to a professional that can maybe help provide some tips on kind of where your credit scores are at, what your credit profile is at that particular moment. So this is oftentimes something that I'm able to help people with,
Okay.
and there's no cost for it to where I can provide some guidance, kind of a little bit of a roadmap to get to a score that we might need. Some people are often very pleasantly surprised as far as where their credit scores are at the moment. They may think that they can't purchase a home, but actually they can. So there are options for a wide variety of
Okay.
credit scores. But let's get to some tactics here. So the one of the main things is credit cards. So that's going to have a pretty high impact on what your scores are doing. Okay.
Mhm.
Now, first off, you want to make sure you're making your payments on time, right?
Fair.
Like those minimum payments on time on any type of account that's reporting to a credit profile. But those credit cards are going to have the largest bearing on it. So oftentimes I'll speak with people, visit with people that just pay for cash with them for everything, which is great. It's a great strategy, but it does come at a little bit of a cost
Right.
because now your credit score might be either taking a little bit of a hit or you may not have one at all. So the encouragement would be to, if you don't have a credit card now, maybe consider opening one. Keep it minimal. We don't need to be maxing out. In fact, we don't want to max out, but keep it very minimal, very easy. Maybe take gas, groceries every month, pay it off, stay in that rhythm. The big thing is you really don't want that amount of balance to exceed 30% of where the maximum limit is. So for example, $1,000 maximum credit limit, you really want to keep that $300 or under.
Okay.
That'll improve. Now, another quick shortcut too is if you have a family member, could be a friend, doesn't really matter. If you have a family member that has a great credit card, it's been around for a long time, no missed payments, et cetera, they can add you as an authorized user to that credit card and
Right.
instantly pick up on the history of that credit card. And I've seen credit scores, improve dramatically by using that strategy.
That's really helpful.
Yeah.
How long does it take if someone's getting a credit card for the first time to build that credit?
Yeah, that's a great question. Let's use the scenario where they pay cash for everything, right? So we just have zero credit history period. So that's probably going to be a 6 months to a year time frame.
Oh.
That's going to take some time because what credit scores want to see is that you can make your payments sometime. So it's going to take some time to just establish that history, right? So it's going to be a little bit of a longer, okay, time frame for that.
Right.
But that authorized user approach, about 30 days. So if the
Oh, wow.
challenge is the lack of credit usage, that's where that authorized user can really come in handy.
Incredible. Now, one thing that I have learned about divorce is most times couples have shared or joint finances in some way, even maybe credit cards with two people on them. And this is something I experienced personally. I had some business credit cards with my ex-husband that I was like, you keep them, I'll just pull myself off of it. Well, I didn't even think about how that was going to affect my personal credit because we had these great business credit lines.
Sure.
And all of a sudden that dropped off. So if you are not yet divorced and thinking about what credit might look like for shutting down lines of credit and things, that's something that I think talking with a lender would be really important.
Absolutely.
Really,
Absolutely.
really.
Yes. Yeah. Yeah. And again, it's everybody's specific scenario. So definitely consult with a professional, maybe even a financial planner could probably give some guidance on this.
Mhm.
But that's definitely something that very commonly that I'm having conversations with on a daily basis.
Yep. Yep. Really important. Anything else on that situation? I think other than just good for you, forward thinking.
Yeah, I mean it's great thinking. It's the way that this is kind of worded. It makes me wonder if oh, is my income enough,
Mhm.
to purchase a home, right? And I think another kind of pleasant surprise for a lot of people is that they think it's not enough, but really, in fact, it is.
Okay.
Okay, so and that's just something where we do some discovery and kind of figure out kind of where that income is, or kind of how that's projected to go. And I think a lot of people are just pleasantly surprised that they can purchase a home at their current income levels.
Mhm.
Yeah,
Right.
yeah,
Especially if you don't have a lot of debt. And that's something too. I think that when they're not in the industry that you and I are,
yeah,
where we're obsessed with interest rates,
sure,
a lower interest rate, which lowers your payment on a mortgage, means you qualify for more house.
totally.
So maybe this year you can't qualify for a $300 house, $300,000 house, but next year you might,
Totally.
depending on interest
Right,
rates, or
right.
vice versa.
Yeah,
Right?
and that's where it comes into no matter where you're at in purchasing a home, whether it's a year, whether it's 2 years, doesn't matter. We can accomplish a lot in the here and now by doing that type of planning. That doesn't take credit checks or anything like that. We can plan a lot, regardless of the time frame that you're thinking for your home.
Really smart.
Yeah.
Really smart. Reach out sooner than later.
Sure.
Let's tell people don't be embarrassed. If you know this is coming, I'd rather talk to you today than tomorrow.
Yeah,
All
absolutely.
right, let's go. We got two more questions that
Right.
they written in. That's great. Two more questions that people wrote in. Hey, Justin, my wife and I are divorcing after 15 years, and she wants to keep the house. The home appraised at $450,000, and we owe about $280 on it. She's planning to refinance and buy out my $85,000 share of the equity. I feel like we need a white word for this. Her income's around $95,000 a year, and she's getting $1,000 a month in child support. His biggest question: how does an equity buyout or a refinance even work during a divorce?
Yeah, yeah, and this is pretty common where we oftentimes will do this before the divorce is even finished. And the way that we look at this, kind of getting back to that refinance, what does that entail? And so that's exactly how we would look at the situation. Is essentially you're completing a refinance on your home and you're receiving cash out through that refinance. So earlier I mentioned you can refinance to pay off debts, to do home renovations. The third option could be to pay off proceedings of a divorce, right? And so that's how this would be handled, is through a refinance and receiving cash out through that refinance. So in this particular case, I think they said that they owed 280, and so if they needed, let's just say, a $50,000 buyout, essentially their mortgage balance would be a 320.
Exactly. Added on to the top of that,
Exactly.
right?
Exactly.
And then what the wife just has to make sure is that she can qualify for that $320,000 loan now,
Right.
kind of a brand new loan, right?
It'll be a brand new loan. Sometimes where the sting come in it just comes from mortgage rates, right? So if their mortgage rate is
Right.
a certain percentage that you have right now, this will update the mortgage rate based on today's mortgage
Yes.
rates, right? So which may not be a big deal. It just kind of depends on where things are at in the here and now on your current mortgage. Just something to be prepared of because sometimes that is kind of where that sting can be felt.
That hurts, right? Yeah, for a lot of people, they might have had a $3,000 a month mortgage on this house, and simply when your ex moves out and you refinance, you may pay $4,000 a month now. And those are the conversations that I always tell people I'd rather be involved sooner than later, so we can sit down with Justin and say, look, maybe everybody wants the husband to keep the house so the kids can stay in the school district. You've got to work together.
Yeah.
You can't just say, well, good luck with it, buddy.
Totally.
You've got to be able to be a team with it. And what we have found is you can fight over a lot of things, but typically if we can keep the house and everybody having a safe, happy place to live as something you just don't fight about,
Sure.
it goes so much better,
Yeah,
right?
exactly. Yeah, quality of life. And there is another option that could be pursued as well through this, which would be a home equity line of credit,
Okay.
which then you're just having that mortgage on that equity line based off of what the buyout would be. Now that scenario may not work as well if the one of the goals is also trying to refinance that person off of the mortgage that's currently existing. But if they're not on that mortgage, home equity line of credit could work out really well because now you're just paying interest on that, say $50,000, and you're not having to do anything with your larger size mortgage, your first mortgage.
Absolutely. It's a really good point. And this is where we say you start balancing some larger assets, especially if a family does have more than just a home as an asset. If there's a retirement, cars, boats, whatever, what we can do is get a big spreadsheet out and start to look at how you asset balance. And, there's a lot of times that I've had people negotiate, great, you take the jet skis and the boats and all of those things. I just want the house with our mortgage payment. And so being able to discuss those things open and honestly is absolutely easier in the beginning than at the, closing table.
Absolutely.
So,
Absolutely.
Justin, that was great. Thank you so much.
Yes. Thank you so much for having me.
Absolutely.
Yeah.
If somebody wants to reach out to you or find you online and has questions, I'm going to link all of your content and the details of this YouTube video. Cool. All right. Thanks guys for watching.